Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth podcast. This is your host, Marc Bautis. Today I'm joined by Mat Sorensen, the best-selling author of the go-to book for investors and professionals in the self-directed IRA industry titled The Self Directed IRA Handbook, an authoritative guide for self-directed retirement plan investors and their advisors. As CEO of Directed IRA, Mat led the trust company to $1 billion in assets under administration in 3 years. His knowledge as an attorney is sought after for real estate, private funds, notes, rules, and regulations. Mat, welcome to the show.
Thanks, Marc. Happy to be here. Happy to be talking about self-directed IRAs too.
So I think it's kind of timely because just investing in alternatives, I hear people all the time, the stock market, it's rigged, it's a casino, everything going on in the banking world. So I think it's timely. A lot of people are interested in alternatives and self-directed IRAs, 401ks. They're a way to do it. So I think it's definitely, the audience will find it interesting. Maybe you can start off by just giving the listeners kind of just a background. What's a self-directed IRA and what's the difference between, let's say, a traditional IRA?
Yeah. Well, like you said, I mean, people have watched the stock market, everybody's like, it's rigged. It's a casino when it's down, and when it's up, they're geniuses. But yeah, I mean, I think there's been a roller coaster in the stock market. Our business has significantly grown. We've, just been around the last few years, and we've really gone after clients who want to use an IRA or 401k to invest in an alternative asset. That's a growing area. And frankly, it's something that most people didn't even know you could do. Like a lot of people are like, wait, my IRA can invest in a private company and a private fund. It can own a rental property down the street. Most people are just blown away that that's even a possibility. So let me first say that's possible. And it takes what is typically called a self-directed IRA, which really just means an IRA that can invest in any asset allowed by law. If you've got an IRA at Fidelity, well, you're kind of stuck in a brokerage model of, well, you can buy what's on the menu. They have stocks, bonds, and mutual funds. But for people who are like, no, I want to invest in a small business. I want to invest in a private fund, a syndication, a private placement, rental property down the street, crypto. I mean, those are all things IRAs and 401ks can own. But you got to get to a self-directed IRA provider like our company, Directed IRA, who allows those assets in their IRA and 401k accounts.
Yeah, so you mentioned a lot of people don't even realize they can do it, and it's probably because if you turn on the TV, you don't hear self-directed IRA custodians using the same budgets that you'll see at Fidelity or Schwab or someone else that's using.
Right. Yeah, we get outspent.
Yeah. But like you mentioned, you can invest in almost anything through your IRA. What is it? Is it just life insurance, collectibles, and S Corps are the three that you can't?
Yeah, those are the three no-nos. Life insurance, you can actually buy that with 401ks in some fashions, but can't in IRAs. S corporations, IRAs just don't qualify as an S corporation shareholder, but IRAs can own LLCs. That's a very common structure we do here. Limited partnerships, obviously C corporations, which are what you're buying on the stock exchange. If you're buying Apple stock or whatever publicly traded company, those are C corps. So, but then collectibles are it, and collectibles, there's some collectibles that are permitted actually, like gold, silver, platinum, palladium. There's some precious metals that are okay in the collectible space. You actually used to be able to own collectibles back in the day. People could own art with their IRA or 401k. They could own classic cars, antique cars actually. But people were buying these stuff, they'd buy the wine collection that turned into a bottle collection, and there's all this abuse. So collectibles as a whole got banned. So really anything's fair game. I mean, I've had clients buy ownership in Mexican soccer teams, livestock, water rights, all these things that are investment assets that people don't really think of for an IRA or 401k. But we've had clients buy all that type of stuff with their self-directed IRA account with us.
And like you mentioned, it's not like you're going to go to Fidelity and be able to do this. So there certain types, special types of custodians that will allow you to do this inside your IRA?
Yeah, so you want to get to a self-directed IRA custodian is what they're called sometimes. They need to be typically a bank or trust company to custody an IRA or a credit union. We're a trust company. So we're audited and regulated by the banking department, but you need a provider of the account that permits these types of investments. So if your account's at Merrill, they're going to sell you what's on the menu, right? They don't want you to buy real estate. I mean, first of all, it's a pain for them to do that, and they don't make money. That's not their business. And so they're not motivated to let you do that. Now, if you're an ultra high net worth client there's a department that'll let you do it, and a lot of places there is, but you got to be literally like ultra high net worth, not even regular high net worth. And so our company, Directed IRA, and there's maybe 30 companies that do what we do, mostly banks or trust companies that kind of go after that type of customer. And we're going to let you invest in real estate in an LLC, in a private company, but you're going to need to transfer your account. So if you've got, a $300,000 IRA at Fidelity and you want to do $100,000 in a private placement in some business, whatever it is, you just transfer over the $100,000 from your Fidelity account to your IRA account at Directed IRA, and then we'll go invest and hold that asset in your IRA with us. The other $200K can still sit over there at Fidelity, or you could self-direct the whole thing if you want, but you can transfer the whole thing, partial transfer. A lot of self-directed investors are kind of investing at 50K chunks, particularly in subscriptions that have kind of like 50,000 minimums. But, we have, 7-figure, 8-figure accounts over here at Directed IRA. We have clients that have $10,000 in their account, like crypto, for example. We have a lot of clients that bought just a little bit of crypto in their self-directed account here. So you can transfer whatever piece you want, depending on what you're interested in, the assets you're knowledgeable about, and also kind of how you're trying to diversify from what else you might have going on in your other IRA account.
Can we walk through an example of, let's say, purchasing a piece of real estate inside an IRA? Because I know there's some intricacies in terms of how it's done, what happens after it's done. But let's say someone opens up an account at Directed IRA, but let's just say they're buying it using cash and not leverage. Say they transfer over $200,000, the condo they're buying or the investment property they're buying. And I guess that's the first point. This has to be an investment, right? Because a question I get is, can I use my IRA to buy a vacation home or a home that I'm going to use sometime and rent it sometime? I guess the answer is no.
Exactly. Yeah, that's kind of one of the first rules you got to know. It's called the prohibited transaction rule. And what it really restricts is you from having use of an asset that your IRA owns. So if you're buying assets with your IRA, they need to be investment assets, not assets for personal use. And it can't even be like quasi-personal use, quasi-investment, where it's like, well, I got this vacation rental, 51 weeks out of the year it's rented, and 1 week out of the year I use it myself. That doesn't even work either. So it's got to be held 100% for investment purposes. Also, that prohibited transaction rule requires you to buy and sell your assets with third parties. Some people will be like, hey, Matt, I've got a bunch of stock options in this company and I want my Roth IRA to buy them so I can then sell them and make all the money there. Or I've got this piece of real estate that's appreciated. I want to sell it to my IRA and then I'll have my IRA sell it so I don't have to pay tax. Congress thought of that people would try and do that and move appreciated assets to their IRA. So they restricted you from buying and selling assets from yourself to your IRA. And this would include also your spouse, your kids, and your parents. You can't have your IRA buy or sell assets with them. So, but let's say you're going out buying a property, $200,000 cash, piece of real estate. The first thing is the IRA is the buyer in the transaction.
So it'll take title of that property?
Yeah, it's not like Mat Sorensen buying property. It's Directed Trust Company, FBO Mat Sorensen IRA is what's going to be on the contract to purchase. Like, we're going to send money from your IRA for the earnest money deposit. We're going to send the money to acquire the property. You probably have a property manager. Let's say this is a rental. The property manager is going to get the rental income, pay the expenses, and then send the cash flow back to your IRA. So everything's happening at your IRA. You just happen to own it and you're making the decisions for it. But the money's going through your account with us. That, we have to keep qualified for retirement account purposes to keep it a legitimate IRA. And then it's getting the income and paying the expenses. Now, the nice thing about it is this doesn't hit your 1040. So this isn't going on your personal return. If you're making money on this or you sell the property for a gain, it's not showing on your tax return. It's just like buy and sell stock in your IRA account. It's just building up in your IRA and growing. You're not having to pay tax as you're building wealth and getting gains on the assets.
Can you touch a little bit about income and expenses, and can I take the income and go on a vacation with it?
No. Yeah, you can in a way. I mean, you can receive it in your IRA, and if you're 59 and a half, you can take a distribution. Just like people are familiar with their IRA or 401k with a stock or a mutual fund. Just because we're buying an alternative asset, it's the same thing. We're not living off of that income. This is building up and growing in the account. So if you have cash flow coming in, let's say on a rental property, that's building up in your account in cash till you have enough to go buy another asset. And so you're building and accumulating wealth in this for the long haul. So still think of this as IRA or 401k money, even though it's in an alternative asset, but it's building wealth for the long haul.
And I guess same thing on the expenses side, right? So let's say the roof, I need a new roof, costs $10,000. I can't just take $10,000 from my personal bank account. It's got to flow back through the IRA. Either I'm able to make a contribution, I can transfer more over, or that rental income support builds up enough cash to pay for the expense.
Exactly right. Those are exactly the options. So the IRA gets the benefit of the income of the asset, doesn't hit your tax return, you don't pay tax on it, but it also has to bear the expense of the asset. A lot of times, client, let's say they have a $300,000 account and they're buying property for $300,000. I'm a little nervous for that client in case something unexpected does happen, like the roof goes out or an AC unit's bad. And it's like, man, I got to throw in $10,000 on this property and I don't have the income on it yet. So you want to be careful and make sure there's enough cash in the account to cover some unexpected expense. Because if you've maxed out your contributions, you don't have any more money in an IRA you could transfer over, you can get stuck. There's some workarounds to it. There's a revenue ruling called 80-28, I believe. It's in my book, where you can actually lend money to your IRA to avoid losing an asset or to have waste of an asset. So it's possible to get around this in some ways, but it's very painful. And you're basically going through a revenue ruling process the IRS has laid out, which once you're going down that road, anything in the tax code, you're like skating on thin ice. So you want to work with the money within the account.
Now, the other question I see a lot when it comes to buying real estate in an IRA is, in the example we used, they had $200,000 available. What if they don't? What if they have $100,000 in their IRA and now they want to go to Wells Fargo or Bank of America and take out a loan for the rest of the remaining amount?
Now, you can get a loan to go buy real estate with an IRA, but you're not getting it at Wells Fargo or Bank of America. So you want to go to a bank that lets you do what's called a non-recourse loan. One of the other types of prohibited transactions out there is what's called an extension of credit prohibited transaction. Again, these prohibited transactions are rules that apply to IRAs and 401ks. By the way, if you engage in one, you lose the retirement account. You lose qualification of the account. It's a distribution. If you're under 59 and a half, there's penalties. It's ugly. You don't want to commit one. So there's this extension of credit prohibited transaction that prevents you or your IRA from guaranteeing debt. So my IRA can buy real estate. It can get a loan on real estate, but my IRA can't guarantee it, nor can me as the IRA owner or my spouse or kids. So there's a number of banks out there. There's probably 6 or 7. If you go to directedira.com and look up resource directory, there's a number of the banks that we have with some of the loan officers that do a lot of these. But what those banks do is they're going to lend on the property, and in the event of default, they're going to simply foreclose and take the property back. They're not going to go after the IRA. They're not going to go after the IRA owner for any deficiency. Because those banks don't have any individual or account on the hook, they just have the asset they lent on, they're going to typically require 30 to 40% down on the property. So in your example of $200,000 property, you have $100,000 in the IRA, you'd be able to get what's called a non-recourse loan there to acquire that property. Now, the property needs to be income producing though. So rentals, it could be single family, whatever, multifamily doesn't matter necessarily, but it just needs to be income producing. So you can't get it on like raw land or something like that if you're speculating on land. Although your IRA could own that type, it's just going to be hard to get a bank that's going to lend on it.
Like you mentioned, it has to be income producing. Will they look at that income and say, this is a little tight? Because especially in the Northeast, you'll see a lot of properties where it's tight. And what a lot of people are buying it for is the appreciation aspect of it rather than the cash flow.
Yeah, and that's going to get into how much money you have down, and there's going to be a debt service coverage ratio that they're going to look at. Every bank's going to have their formula. We've had some of these banks at my Self Directed IRA Summit, which is once a year, and they kind of go over their analysis. I've done some webinars. If you want to get into how the banks analyze it, you can go to directedira.com webinar. We did one about 6 months ago on lending, where one of the banks came on and talked about their formula they use. From my sense, and I've even bought real estate with my own retirement account and got a non-recourse loan. So I've done this myself. I like it because I have more purchasing power, and if it's a good property, and I've done well on the ones that I've done. So I think it's worthwhile to look into. But my assumption has been, and even as I've ran it with clients over the years, if the property doesn't qualify for the bank to lend on it, you probably don't want it. Now, there is the one exception, like where you said, and your question is really good because it was like some people may be buying it for appreciation, like they're not buying it for cash flow. Well, the bank literally cares about cash flow only. So if it is more of a play of appreciation and that thing's barely cash flowing, but you're like, yeah, but I think it's going to appreciate significantly in value in the next 5 years or whatever. Those ones might be a little harder to get bank financing for, because the bank, they've got to worry about lending the money now. And what's the value of the property now? If we had to foreclose, what's the rent you're going to get next month? They're not going to take into account what you think it's going to be worth in 5 years. Even if it seems realistic, they're going to do this debt service coverage ratio test, which is what's the rent? What's the expenses? Is this property going to make enough to cover the expenses and pay the mortgage every month?
Yeah, makes sense. Now, sticking with real estate, question on, I guess, the benefits of it. So obviously someone can use their IRA, and it's really two purposes. One, it's a source of funds to do some of this investing that they otherwise may not have. But then also it's an IRA and there's a tax benefit to that. But a question I see a lot from CPAs, and especially when people are using their IRA to purchase real estate, let's say they have the $200,000 in an IRA, $200,000 outside it, they'll say, why don't you just purchase it outside, because you're giving up some of the inherent tax benefits of real estate. Are there different assets that make sense to buy in the IRA versus not buy in the IRA?
Yeah, I mean, and I'm a tax lawyer. At the end of the day, that was my profession before I really got into self-directed IRAs and started running the company. So that's a good question. Do both. I mean, if we're only talking about one property and one opportunity in your life that you could buy, and you could buy with your IRA or your personal funds, and it's the only thing on the table here, okay, I could see the argument, buy it personally and let your IRA invest in something else. What happens though, and this is, tax lawyer Matt, I've been just around the block, high income people really don't get the benefit of depreciation. Like, I own a lot of rental properties. I don't get to take the depreciation write-off. I can offset other income on other properties, but I can't use it to offset my ordinary income. You have to be a real estate professional to take all these losses on rental real estate and be able to use them against your ordinary income. Well, I'm not a real estate professional. I got a day job. I'm running businesses, that aren't real estate businesses. So for a real estate professional client, that argument could make sense. I'll come back to the real estate professional here in a second, because they got other way better benefits here to use the retirement account. So I can see that of, let's use these losses. I want to offset some of my other income, but I want to make sure that person's a real estate professional and that these losses that happen on real estate, they can actually use against their ordinary income. The other thing to keep in mind, losses on rental real estate, when you sell the property, you have depreciation recapture. So sure, I get depreciation, but eventually the IRS gets paid on that. Yeah, now you could do 1031 exchange after 1031 exchange and try and kick the can down the road. But the 1031 exchange too would just, again, I have a lot of sophisticated, experienced real estate clients. Sometimes you're just putting a square peg into a round hole. You end up putting deals into these things and time deadlines that don't really work. And we've had lots of clients sell great properties and end up in crappy ones out of a 1031. And so there's a little pressure on the 1031 on your personal side. It's a good point and something good to think about, but my real estate clients and clients that love real estate and do well investing at real estate, our message has always been do both. I mean, that's what I do. I invest in real estate personally, and my retirement account invests in real estate just because I get a better overall return. And at the end of the day, someone with $200,000 in their IRA or 401k, I'm not looking at what can I invest in personally. I'm looking at what can that $200,000 be invested into, and how can I make that more? Because if I don't invest in real estate, what am I doing? I'm just investing in the mutual fund I'm already at, or some stock or something else. So I want to look at what could that $200,000 in my retirement account be invested into, and how do I get that account to be the biggest account possible? Now, for some people, they don't have a good opportunity in real estate. They could be in the stock market. That's fine. And I'm not saying self-directing is for everyone, but a lot of people just have done better in real estate, know real estate better, or they have more confidence in it in the future. So if you want that $200,000 account to be a bigger account at the end of the day, then I would invest in real estate if you think it's going to do that overall versus the stock market, whatever else it was invested into yesterday.
Yeah. And I guess speaking of real estate, a lot of people like to lend out of their IRA. And I see CPAs recommend doing that because if you look at the lending, it's ordinary income that you're receiving versus if maybe you purchase a property for appreciation, maybe it's capital gains. Also looking at, all right, if you're doing both, does it make sense to kind of look at the taxes that you would pay outside versus inside and try and maximize what types of assets they're putting into each?
Yeah, great point. Private money lending, or people using their IRAs to be like a hard money lender, private money lender, is very, very popular. It's probably one of our second or third most common assets is just a secured note to some other real estate investor. where you're getting points and interest. And that's becoming more and more popular right now, actually, as banks are tightening up, cash is becoming more valuable to get deals done. There's opportunity out there. Other investors are needing funding. And so we're seeing an uptick in that, actually. And it is kind of a more clean cut way for people who want to just be a little more passive. Let me kind of play the bank here. I don't want to go do the deal and everything. Let me just be the private money lender. So that's another good way to do it.
What's the actual mechanism for opening up a self-directed IRA? Is it similar to what you would do at Fidelity or Schwab or someone like that?
Yeah, it's pretty similar. I mean, our accounts are all online, so you can just do an e-sign application, go to directedira.com and just start your new account. We also have new account reps that can walk you through it and do it by phone, answer any questions you might have. It's pretty simple. You set it up, and it's really a 3-step process. Step 1 is getting the account open, which, again, you can just do online. E-sign app's pretty straightforward. Step 2 is you got to fund it. I'd say 95% of clients are moving money from an existing IRA or maybe an old employer 401k. So they're rolling funds over or transferring funds over to the account. Some people are starting at zero and putting a new contribution in, but most are transferring existing funds. So that's step 2, you got to get it funded. And then step 3 is making the investment. So whether it's a real estate deal, a private fund investment, whatever it may be, next step is we're actually investing the money. And so in that step, there's going to be some investment documents. It might be documents for an LLC or a subscription agreement or the actual real estate paperwork, the contract and deed and closing paperwork if you're buying property directly in the IRA. Well, one thing a lot of people do actually in the real estate is they actually rather have their IRA own an LLC 100%, which they can manage, and then the LLC owns the property. This is for people who want a little more greater control. They get the checkbook for the LLC, but their IRA owns the LLC. And so that's a common strategy. We have more resources on that. But at the end of the day, it's 3 steps. Open the account, fund it, which is usually transfer rollover, and then figure out the investment you want and get the investment docs done in the IRA's name.
So just going back to what you mentioned about having the IRA purchase an LLC and then that LLC goes and purchases the real estate. So essentially they're creating this LLC, the IRA owns the LLC, and then they can do everything under this LLC, which is technically owned by their IRA.
Yeah, and so they don't own the LLC, their IRA does. They'll be manager of the LLC, though. Like manager of the LLC is like president of the corporation. You're the one who can act on behalf of the LLC. So you could have authority on the bank account for the LLC business checking account. You can sign the contract. So if the LLC's XYZ Investments LLC, whatever you wanted to call the LLC, you're signing as manager of XYZ Investments LLC. If the LLC goes to private money loan to someone, or it's buying up a rental, or it's flipping a property, whatever the case may be, it's XYZ Investments LLC on the contract now, and that's what's on the title, and you're signing and directing all that, signing the paperwork. And then the money is going back in the LLC checking account. Now, you can't take money from the LLC because you don't own it. The IRA does. So it's got to go from the IRA LLC, the LLC's bank account, back to the IRA. Then you could take a distribution from the IRA. The LLC is really popular, particularly for real estate clients, people buying properties at auction or doing a lot of private money lending. We have lots of clients who do non-performing notes where they'll go buy bulk defaulted notes and try and work them out. Clients doing rental properties. I mean, even I use the IRA LLC structure. I like the LLC. It's just easier.
Makes sense. Going back to our earlier example of purchasing that $200,000 investment property. Let's say that I have $100,000 in my IRA, and we talked about the second alternative was getting funding. But what about if I have $100,000 in a personal account? Can my IRA partner with myself to purchase something?
Yes. You got to be careful on how you do it. So if you remember, I mentioned earlier, there's the prohibited transaction rules, and you're restricted from transacting with your IRA, like you personally with your IRA or your spouse with your IRA, but you can co-invest into assets. The restriction is about transacting between buying and selling assets, or transacting between your IRA and yourself. So let's say it was a property and it was $200,000. You had $100,000 in your IRA and you had $100,000 of personal funds. You could put both sets of funds into an LLC where your IRA owns 50% because it put in half the money. You personally own 50%, and the LLC goes and buys the property. Or what's even more common is like spouses' IRAs, or even like your traditional IRA and your Roth IRA, or your IRA, your spouse's Roth IRA. Again, let's say it's $200,000, or sorry, let's say it's $100,000. I'm going to do the math easier here. Let's say your spouse puts in $60,000, your account puts in $40,000. We're going to break up the ownership in that LLC 60%, 40%. So we're always going to break up the ownership based on dollars invested. But it is possible to combine personal funds with your IRA or have your spouse's IRA funds in. Now, you have to do that at the formation of an LLC. It's called a multi-member IRA LLC. It's a whole chapter in my book, the Self Directed IRA Handbook, which you mentioned at the beginning. You have to be very careful on this, because what you can't do is you can't be like, all right, my IRA owns an LLC 100%. And 6 months later, I want my spouse's IRA to come in and put half the money in the LLC, and then I'll transfer 50% ownership from my IRA to her IRA. That's not going to work. That would be a prohibited transaction, because now your account just bought and sold LLC ownership with your spouse's. So they've got to come in from the beginning where they're not buying or selling or moving around ownership between each other.
What's the best way for people to stay away from prohibited transactions or doing things with disqualified persons? Can they go to the custodian and give a scenario? And of course, I'm sure the custodian does not want to provide legal advice. Or do they go to someone like you? Or where do they? I know your book actually has a lot of really good examples, but I'm sure people come up with all kinds of scenarios on what they want to do.
Yeah, we get them all. So what I would say is, the book's a great resource. We have also just lots of free educational content on webinars and stuff about understanding the prohibited transactions. Even our Directed IRA podcast has a few episodes that are just on that to make sure you understand those rules. And I always tell clients, like, self-directing your IRA is like playing a board game. It's not rocket science. You just got to learn the rules a little bit before you start rolling the dice and moving pieces around. But once you learn the board game and play it once or twice, it's the same thing over and over. So there's a little bit of a learning curve to get the rules. Now, if you're just using your IRA to go buy assets and you're not involving yourself or your spouse or family, it's just your IRA going out and making investments, just don't you have personal use of them. Don't go stay at it if it's real estate. Don't go fix it up and work on it personally. As long as you're kind of keeping a more passive approach to it, you're not personally getting involved or having family involved, it's pretty clear cut. If you're like trying to use your personal money in your IRA, or it's a company you're already invested in personally, or you have ownership in, then you're going to want to get a consult. And my law firm, KQS Lawyers, we have a legal team of 50 plus people, and we really specialize in business and tax planning and have a niche in this self-directed space. You can get a consult with one of our attorneys on your deal just to make sure you're not blurring the lines and causing a prohibited transaction. You kind of got to have this little sensor going for your deals to know, all right, this one's looking a little messy because I'm personally trying to get in on it. Or a recent call was, someone who was in an LLC of a property they were flipping and they had some partners, but they wanted their IRA to lend more money to the deal. Well, I got to know who else is in this. How much do you own in the LLC? Can your IRA lend to that deal? It's kind of a gray area. It depends on a lot of circumstances. So those are areas where you'd want to get a little specific advice to your situation. And your custodian, they do not provide advice. We're going to provide, at our office, we're going to try to give you some educational and give you some clear-cut rules. Yeah. But if you're kind of in the gray area scenario, our team's going to be like, hey, go talk to your attorney or CPA. You got to go get professional advice on this, maybe an advisor or someone that's familiar with the rules. But the custodians don't want to be giving, they actually can't give you legal advice or financial advice. They can just process what you tell them to. Like us and our competitors, we're directed custodians. We process what you tell us to. Now, if we see something dumb and we see, oh, your IRA is buying real estate from yourself, we're going to put the brakes on it, but we're not proving anything or able to answer questions on kind of gray area type stuff.
Makes sense. All right. Well, that concludes all the questions I had for you today, Matt. Thank you for sharing your expertise with our listeners. For those of you who tuned into today's episode and are interested in learning more about self-directed IRAs, Matt's book, the Self Directed IRA Handbook, it's available on Amazon. I've read it. It's a great book. Matt, can you share your Directed IRA's website or any other place that you'd like to send our listeners to?
Yeah, best place, get over to directedira.com. Lots of resources there. We have our webinars, our podcast you can connect to there, articles. You can schedule an appointment with one of our new account reps. Thanks, Mark, for having me on. It was a pleasure to be here.
Great. We'll link to all those resources in the show notes. Thanks again, Matt. And thank you, everyone who tuned in to today's episode. Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.